This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Wednesday, December 17th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here at March corn up a penny and 3/4 at 438 1/4. January soybeans were down 3/4 at 1062, and March Chicago wheat was down 3/4 at 508 3/4. We had a number of export announcements here this morning, starting off 198,000 metric tons of soybeans to China for 25, 177,055 metric tons of corn to Mexico, also for 25, 125,000 metric tons of soybeans to unknown for 25. And then we did have a cancellation. I know there were rumors yesterday out of China, but China did cancel 132,000 metric tons of white wheat, and that was for 25. I guess what we know starting off the day, President Trump set to address the nation here tonight, 8 o'clock. Is going to talk about the first year. So it'll be interesting to see what he has to say, as it always is. And we looking at the soybean complex. I know yesterday we talked pretty deep about it, but we did fill the gap. So I think now a lot of folks are, kind of asking, now what? What's going to happen as we go forward here. Dustin, maybe share a few thoughts as we start the morning, and then we'll throw around the room.
Yeah. Good morning. Thanks. The Chinese wheat cancellation is starting there. That was the rumor yesterday. It turns out to be true. That's pushing the March SRW contract to new contract lows. It's also the lowest premium wheat has had to corn for those contracts. And it's just not a great sign. We've got, potential peace talks in the Black Sea region. You start to wonder, does this at some point impact corn? I would say corn's holding in there really good, all things considered. We have strong demand, and there's just not enough flow to the usage centers right now, right? But eventually that calendar gets far enough along that these are not great signs. I just think that this should be a growing concern, especially on the corn side.
Sure. Justin, what's your thoughts? I guess, everybody, the $1 million questions, like you go down and fill that gap. The chart, if you look at all the charts, just don't look like, it's kind of blah right now from a technical perspective. Plus we're coming into slow holiday markets, just kind of right now.
Yeah. Not to beat a drum too many times here, but, kind of a history lesson with what we saw, happen with managed money and, flipped and got, I think within, handful of contract from all-time record long, which was the 2012 drought year. So did that in a very short amount of time. Now you're punishing a lot of those longs that were at much higher prices. I would say, and this isn't confirmed, but supposedly on Monday, 55,000 contracts of EFPs, which is exchange for physical, traded off the January bean contract, which is a huge amount. I mean, that amount would only be a big commercial trade. And it's in January, right? So you're going into first notice day. So it's someone that actually wants it. That equates to 7.5 million tons. So, I think the obvious thing would be, was that China, did they have just the futures hedged for these purchases, and they had freight booked and just converted from futures to physical? That seems like the most likely, if that's in fact true, that's who it was. So maybe they'd already bought it. That was part of the futures rally, that we did see during that time frame. They cut a deal, just got it bought. Like we talked about, it's a drop in the bucket money wise for them for negotiating. So yeah, maybe we broke all the way down. You got, I think a lot of dismal attitudes coming back. We went from despair in August to euphoria, 3 weeks ago, 4 weeks ago, and now kind of flipping back the other way. So market's doing a good job, like I said, especially soybeans, of making people that have been, bearish the whole way up look silly and bullish the whole way down look silly. So now we're back, close to the 200-day moving average in beans, and we're getting some more sales starting to flow through. So I think we're probably doing a job of finding that value area in things. And like Dustin said, corn's hanging in there good. I was actually thinking about this yesterday. It's like, we can all talk about what the ending stocks are going to be at the end of the year. I think there's also, a supply demand number at each point in time, right? And if you think about, we have big supply, but how much is available to the market when we have record demand? And that changes over time, to Dustin's point. So it's like September, for example, going into September 1st notice day, we had one of the tightest stocks, supposedly we had in a long time, and we went to full storage just because the demand wasn't there and old crop stocks had to move. So it's not necessarily just a gross number of what total supply and demand is. It's what time and what time of year. So right now, I think we're found a good balance with the record book we have on and the willingness of the farmer to sell. I do think after the first year, does that start to change? Wouldn't surprise me. Once realization comes in about actually needing some money, sitting down with the banker, how much you have marketed. I think those are all real conversations that have to be had, early first quarter of next year. That's not necessarily a bearish or bullish comment, but I think it's
a reality.
That is the reality. So, and maybe we're on a big, rally. Maybe we just keep doing a bunch of business and yields come in a lot lower on the January report, and there's all sorts of things that can happen. But I do think individually looking at what, if you have to do something by a certain date, always make sure that you have, kind of at least a plan B in place.
Yeah. I just can't believe how it all lined up with the shutdown and no data. And they were able, if in fact it's true, and what you were referencing is what took place, how orderly, and it would have been interesting to know what that would have looked like had we all known, if we would have really had that data, because it just got done. We look at the chart, we're like, oh yeah, sure. I mean, I guess it makes sense that they rallied $1.
Yeah. Well, I don't think we were the only ones maybe thinking that, when we were at the highs, because it certainly felt like that, front running all this and just turned up all the technicals, and it was pretty obvious you're running out, just beating the shorts over the head every day. And then we got to the point where we were $1 plus over South America, just completely uncompetitive. Obviously we didn't know the fund position, but I think even the most, even the person that had maybe the highest guess for the fund length was probably undershooting what it actually ended up being. I don't think anyone thought they were record long. Mm-hmm. So I think we're going through the process of cleaning that up and trying to figure out what it takes, how much farther we have to go down to match up buyers and sellers again. And I think
if this is true, Justin, does that change your opinion about what he's negotiated with China in terms of him holding them to the fire? I mean, if it's what happened, then they were right, and they told us that they were going to get it done.
Yeah, I mean, usually it's been a bad bet to go against them. They kind of just tell you what they're going to do. Now, I'm just saying for things like ag and certain policies that he really wants to go after. Yeah. Obviously, there's a lot of other things that just come and go, and whatever the flavor of the week is. But the question still is total beans and total bean demand in the world. So these are definitely welcome, because then you're like, we didn't just the worst case scenario would be that we ran high, got super uncompetitive. Everybody bought, the rest of the world bought South American beans, and then China still didn't fulfill their obligation. So we're stuck with the worst case scenario. So at least if they are buying it now, they have been, they keep dumping, 22 and 23 government held soybean stocks in China. So I think seems pretty obvious they're going to dump those, replenish them. And then, it gives them a reason to be a little diversified from 100% of the chips being on South America weather this year. So I think strategically it makes sense for them to do it too.
Jace, you were nodding. Anything to add here before we head over to meats?
No, I agree with all that. No, not much to add. I mean, I'd say, looking forward, what are the markets going to do over the next couple months, right? I guess is where my head's at. And I think Justin hit, on the copy, right? It's like South American weather and farmer position, and what's the need of the farmer over the next few months. And that's likely raising cash, right? And there's going to be tough conversations, tough bills to pay, with rent. If these are the markets we're looking at, if there's not, the two things that could change this narrative is a big January report, a big yield drop that could fire this market back up, which is a little, unnerving because we're already kind of trading that a little bit, in corn. And I think that's some of the reason corn's supportive, right? So it better, I think we've said that in this before, right? We better see a yield cut, but if it's a substantial one, that would be obviously welcome. And then South American weather, we're just getting into where weather's going to matter. We're probably still too early to really be too concerned. And everything looks good right now, but we still got 2-3 months to get through of South American weather. So you never know. But I worry, obviously, like the odds are we have a South American crop, right? Like if you just look at, if you always bet on a drought, that's a losing bet.
Especially in a rainforest, it's hard.
Yeah, right. Hey, it's raining in a rainforest, right? So I'd take any kind of weather scare, quote unquote, as a gift, personally. If you feel like you're behind on beans, you feel like you missed it or whatever that is. I mean, and if I had some of these conversations where I wish I would have sold more, I wish I would have done this. It's like we're still decent, right? I mean, the lows were $10 and we're at 10.70. I still think there's things to do, and I think there's unique ways to market and have some of that upside, and option volatility, all those kinds of things. There's still a lot of unique ways to market. So I don't think you just throw in the towel and say, oh, this is stupid. There's ways still to protect, and I think there's still a ton of risk in beans, in my opinion. I think corn's a little more friendly, but I think there's $1 more of risk in beans over the next few months if South America has a good crop. I mean, there's just, to Justin's point, there's just too little demand, too much production in the world of beans. Yeah,
so two things I'd want to say. Dustin, did you notice the real? I know it's kind of your wheelhouse. Did you see what it did?
It's lower today.
No, but it spiked all the way down to like 5-month lows, if that's right. Is that right? And then now it's back to almost unchanged?
Right. Yeah. I don't know. Today you're saying, right?
Yeah.
I actually did not see that yet. So.
Oh, yeah. That's what my chart shows, but.
Yeah, I see that.
I mean, it could be bad data. I just noticed that, but.
I'll have to look into that because I don't see any headlines, but they had a really bad GDP print, and this is my concern, is that they have this very progressive government that's been wanting to start cutting rates, but the market basically wouldn't let them last year. We had the worst performing major currency into December 2024 because Lula's new central bank chief was expected to be very loose on monetary policy, and they obliged the market. We had a pretty good rebound out of that just because they were more conservative in their monetary approach. But these, this bad economic data, I think that the Brazilians are very good at destroying currencies, as we saw in the 20th century, right? And I think that's the market expects.
But then you look at the other thing. It's like you got Warren Buffett, guys like that, putting hundreds of billions in Japanese yen to hedge against the dollar. He thinks the dollar is going to continue to just lose value. So you look at things like silver's up another 4.5%. It's almost $67 an ounce. All the metals, kind of how you would hedge the dollar. A lot of those things are just making all-time highs. We do fall in that asset class, meaning grains. So, like I said, I think there's all these bearish headwinds to get through, or potential bearish. But if one of these things did hit, like a drought, it doesn't have to be a horrible drought. If we could take, if you took 10% off the Brazilian crop, if the January, now these are all ifs, obviously, if the January report, we lost meaningful amount of production in the U.S., and you have kind of these, I'll call macro tailwinds out forward, maybe that starts something off into the new year too. So trying to play both sides of the coin here on what, that's why I'm so neutral on and trying to be open-minded on what I think from here.
Yeah, I think the best chance for, commodity growers, right? The export market determines everything. It's if we continue to destroy the currency, all of that tailwind that Brazilian farmers had of riding a falling currency over the last couple of years, like that could be a U.S. grower thing too, right? Like it's these things are still dollar denominated, and look at silver, right? $68 now an ounce. I mean, there's a reason for that. It's not just a supply and demand fundamental problem. It's people are losing faith in the currency, and why wouldn't they, right? Like the Republican, Democrat, we're very good at raising the deficit $2 trillion a year. Eventually, that's going to catch up to rising flat prices.
Very good, fellas. Just coming into the open here real quick, Ryland. We're going to have a cattle on feed report. I think we've seen some estimates trickle through, so maybe touch on those. Nearby hogs trying to make a new high for the week here. And then also we had one of our viewers ask if you could touch on the demand side for fat cattle real quick. That'd be great. So what do you got for us?
Yeah, so I mean, sideways action. I mean, as far as it goes right now, I think you're kind of sandwiched right now between the 40-day moving average and the 100-day on the live side. Obviously, feeders are still carrying this nice premium at 100 days. So we did close up in feeders pretty good yesterday, triple-digit gains. So it seems like that demand side is still really firm. We're carrying this big premium to the in the index versus futures right now, and it seems like that really hasn't backed off. We've seen auction prices really surge too, so it still seems like, at least on the younger side, that demand really is strong right now. On the beef side of things, it just looks like it's sitting back a little bit. I think it's a little bit of a misnomer that beef demand spikes here before the holiday. I mean, seasonally we do see a little bit of an uptick, but it just seems right now, judging by how boxed beef is performing, it just seems kind of stable. We were down 58 in choice, we were up $1.80 in select. So kind of looking into it, just coming into the day, Packers don't look like they have the fire under their belly like they had for the past 2 weeks. So we see asking prices for cattle around $233 in the South. I think right now the board's trying to bake in, steady to possibly firm trade. So I don't think we're going to see that $6 to $8 kind of gain like we saw, recently, but we'll see. I mean, supplies are obviously still really tight, but just overall, it does seem like the Packers are still going to be kind of coming after it again this week, probably ahead of the cattle on feed report. On feed inventory expected at 98.2%, placements at 90%. So, I mean, we're talking 10-year low in placements, and marketing's at 88.5. So pretty small numbers here just overall. So I think that just reiterates this kind of longer term kind of friendly bias in the market right now. Have we gone up too far too fast? It doesn't really seem like it. The cash markets, the futures have kind of led the cash. So it just seems like we're kind of chopping around sideways, just waiting to see exactly how this is all going to play out. And like I said, just kind of discount to that 100-day moving average. And on the hog side of things, a big drop in cash. It's down $3.12 yesterday. So not good news. I mean, it looks like makes the February premium look pretty wide at this point. So we're just not likely not to see that big spike in seasonal demand until probably after the first of the year, just considering, maybe you get a little bit of uptick in ham demand ahead of the holiday, but overall it just seems like you put the cart before the horse a little bit too much here in price. So we'll see if that bleeds into us today.
So Ryland, we kept talking about the gap in beans. There's some monster gaps that we're close to in cattle and feeder cattle.
Yes, we are trading in some of those gaps right now. So, I mean, as we say, all the gaps get filled. So, I mean, why wouldn't it just go spike right up and take out all those gaps? Obviously, the timing and when that happens makes a big difference too. Some gaps we've seen have stayed open for years on some charts. So like I said, I want to get too excited, but obviously, we're in a unique situation in cattle. We're in a kind of transitional phase in the cycle. And at this point, see how aggressive Packers have been. So with the border still closed, I think that's going to be the biggest X factor that really changes the game, and it's still going to take some time to work our way into any kind of surplus, or see any numbers from herd rebuilding. So obviously, like, there's going to be a lot of emphasis on the January report to see that heifer replacement number, just to see if this is indeed slowly starting.
So I know, like, one of the first things I learned from some of the bigger traders when I first started was that these big bull markets, they almost always give you a second chance to sell.
Well,
so as I look at this, it just, if you were someone that completely missed that break, that massive break that we had, and now you're called 2/3 back or so, probably a decent opportunity to at least get some coverage on if you didn't.
Absolutely. I mean, that's really what we've been talking about with our producers. It's like, if you really felt like you missed a big opportunity, you're not that far off from the highs anymore. I mean, anybody can outguess where this thing is going to go and be right or wrong, but yeah, you've taken a lot of fear out of the market. You're just not seeing the headlines like back to back. We were seeing headlines for about 2 weeks that were just negative, different sentiments. There was just panic. And there was a lot of fear, and there was a lot of animosity, which there always is between packer and producer, but like who the winners and the losers are going to be, and how it became a hotbed political issue for a time. And that seems to have really dissipated. So hopefully we can kind of cut down on the headline trade and a lot of the sentiment. But yeah, to your point, yeah, this is a great opportunity. And no question about it. I mean, like, everybody's got a pretty short memory, but just think about where we were at a month ago and where everybody's head was. This thing was over. That was I think the conclusion that a lot of people came to. And now we see, yeah, we're getting a second chance. We got some life back into it, and we could be higher next year. I think that's something that people, everybody thinks this is it. It's done, it's over. But like, we still have a lot of time to get through. We're not going to see any herd, a calf born today, we're not going to see in the supply for years to come. So, I mean, like, the market still has to feel comfortable, I think, with the supply ahead. And at this point, I think a lot of the analysts and a lot of people making projections really aren't factoring demand into their equation. I mean, it seems like there's a lot of different kinds of demand when you start talking about the cattle sector, whether it's packer demand, whether it's end user demand, retail demand, consumer health. I mean, like, there's a lot of factors that I think go into this that can really influence the overall direction. But right now, I think you've got to keep the demand focus mostly on the cattle side of things. Even though we know packers are consolidating, they're losing money on the beef. They're going to be able to make up for that in different kind of margins, in pork margins, chicken margins. So, I mean, we've seen this before. Packers have lost money for months, weeks, years at a time, and still managed to pay higher and higher prices for cattle. And we've seen that in other cycles as well. So it feels like we're at the tail end of the cycle, and that's really what I think everybody's trying to figure out. When is this finally going to stop? So it's going to be an interesting next couple months here.
It's got to be one of the biggest, like, bull run cycles in cattle, don't you think? I mean, we're going on, what, 6 years or?
Well, I mean, like, we're right now. I mean, like, you can go back to 3 years. You 4 years. You look at where COVID was and that bounce. I mean, it's pretty much been rallying since. But we had a really tight kind of cycle of expansion the last time we were in one. It lasted a very short amount of time. And really, you got to see the weather. There's a lot of factors that go into potentially encouraging herd expansion. Number one, profitability. Drought conditions have always been cited. And it's, I think you have to kind of have a lot of opportunity in the back end of the market as well. So I think things like LRPs, there's been a lot more focus on, option strategies have really kind of changed the game as far as, the producer's ability to take some control here and have a little bit higher degree of certainty just to kind of live through a decent chunk of what would be the start of a downward cycle, or at least a cycle of expansion.
Very good. Excuse me. We just came into the open. We got March corn up $0.0125 now at 437 3/4. Jam beans are down 3 1/4 at 1059.5. And March Chicago wheat is down 2.5 at 507. Tomorrow morning we'll get weekly export sales report. It'll be through the week of November 27th. So we're slowly grinding to becoming caught up here. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.